Welcome to Weekly View on Markets. This week, market was marked by high volatility due to the downgrade of US economy by the rating agency Fitch. So, markets fell very sharply during the week, but on Friday there was a little bit of recovery in Indian markets. Mid and small cap indices outperformed uh, Nifty during this week. Technically, market has closed at the support levels. I expect a pullback from these levels in the next week. And there are a lot of data that is coming in the Indian economy is showing the strength. The strength in the Indian economy is good news for the markets. Let us look at performance of indices during this week. Nifty closed at 19,571. It fell by 129 points, lost around 0.66%. Bank Nifty closed at 44,879, fell by 588 points and closed with a loss of 1.29%. Mid cap index gained 244 points, closed at 37,630. It is a record high level with a gain of 0.73%. Small cap index also gained about 0.84%, closed at 11,698, gained about 98 points. India VIX is at around 10.57. Let us look at performance of various sectors. Most of the sectors lost during this week. There was high volatility in the market, and Bank Nifty also was quite weak during this week. So PSU Bank lost about more than 4%. Realty sector lost about 4%. FMCG sector lost about 1.72%. Auto sector lost about 1.35%. Consumption stocks, oil and gas sector, NBFC sector all lost around 1 to 1.5%. Private banks lost about 0.59%. Infrastructure lost about 0.7%. So there were only few sectors which gained. Information technology sector gained about 3%. That was a surprise in the market. There is correction in the information technology for past several weeks. This week they have gained more than 3%. Pharma sector has been gaining for last 3 weeks and it continues to gain in this week also by 1.86%. Consumer durables stock gained about 0.95%. Let us look at technical charts and try to understand how are the markets set up technically. This is a daily chart of Nifty. As we can see, market has corrected during this week and it has closed at the crucial support level of around 19,400, and from these levels there was a little bounce back on Friday, and I expect that this pullback is likely to continue in the coming week, and Nifty has resistance at around 19,800 levels. We'll see up move in Nifty if it crosses about 19,800 level. This is a daily chart of Nifty mid cap index. We can see that mid cap index has touched the highest level during this week, and after that there was a correction for one day, and after the correction on Thursday and Friday mid cap index has pulled back. So even though there was correction in Nifty index, mid cap index has ended positive on last 2 days. So there are many companies announcing good results. So that is the reason that we are seeing outperformance in Nifty mid cap index. So this outperformance in of Nifty mid cap index is likely to continue. This is the daily chart of Nifty small cap index. The small cap index is also outperforming the Nifty index on the back of good results by many small cap companies. We are seeing good buying interest among small cap stocks, and that is the reason that small cap index is outperforming the Nifty index. And Nifty small cap index previous high is around 12,000. So I expect that the small cap index will touch the previous high in coming weeks. This is a daily chart of Bank Nifty index. I have not changed this trend line drawn last week. As you can see, uh, Bank Nifty index came down and it took support at around this trend line, and it has gone up on Friday. So again, I expect Nifty Bank index to pull off from these support levels in the coming days. Now let us look at some of the macroeconomic parameters, including auto sales for previous month. I keenly observe automobile sales figures as they are one of the key economic indicators. So whenever automobile sales picks up, it indicates that economy is doing well. Last 3 4 months, we have been seeing that auto sales have been going up month on month. The month of July, Maruti has reported around 6.5% increase in their sales. Tata Motors car sector is almost flat with 0.3% growth, whereas commercial vehicles segment has shown around 4% growth. Among these commercial vehicles, heavy vehicle sector has grown by around 14%. That is a good news for Tata Motors. Mahindra and Mahindra has reported 23% growth in car and passenger vehicle segment, and 30% growth in medium, light, and heavy commercial vehicles. Ashok Leyland has reported around 11% growth in the heavy vehicle segment. Eicher Motor sales is flat, around 1% growth in heavy vehicle segment. Two-wheeler sales were flat for the month of July 2023 for TVS and Honda, and Hero Moto Corp sales have dropped by around 12%. That is a little worrying factor for Hero Moto Corp. By and large, the pickup in auto sales, especially in the heavy vehicle segment, is a good news for economy. RBI dollar reserves is at around $603.87 billion for this week. During the midweek, rupee had touched around 83. After that, it has come down at 82.06 against dollar, and closed at 82.06. Dollar index is at 102.01. Gold price is at around 60,160 for 10 grams 24 carat. Crude price has gone to higher levels. It is at 86.15 per barrel. So higher crude price is definitely a cause for worry for Indian economy, and also this may hold the markets. FIs have sold 3,545 crore during this week, and domestic institutional investors have bought 5,620 crores in this week in equity. So domestic buying is nullifying the selling by the FIIs, and that is why we are not seeing any major correction despite FII selling in Indian markets. Core sector growth figures have come in for the month of June. It is a good news that core sector has grown by 8.2%. The core sector includes coal, steel, energy, oil and gas, petroleum products, cement. So these are the major sectors. If these sectors grow, our economy is set to grow. So these figures give a confidence to us that the economy will is stable and likely to grow faster. Banks reported pickup in business loans. The credit growth from corporates is much higher than credit growth from the personal loans. Last 1.5 year, we had seen the credit growth demand was coming from the private loans, that is from the retail customers. Now the corporate credit demand has picked up. So this is also suggesting the core sector growth. That means the demand in the economy is picking up. That is why companies want to take loans and they want to invest. So that is showing in pickup in corporate credit demand. This is supported by PMI manufacturing index, which has come at 57.7. It was 57.8 in the month of June. So the robust demand is stable in the economy, that is in the manufacturing sector. PMI services index has come at a all-time high of 13-year high at 62.3 for the month of July. This is a very good news. The service sector is growing quite fast in the Indian economy. The rating agency Fitch has downgraded the US economy from AAA to AA plus. So this resulted in a panic reaction by all global markets. Accordingly, we saw the Indian markets also saw big correction during this week. But the rating agencies are quite positive. Their outlook on Indian economy is positive. Morgan Stanley upgrades India rating, and they have given a very positive outlook for Indian economy, and they have downgraded the Chinese economy. So now China and India, they are competing for the manufacturing and services sector. So a negative outlook for China will ensure that FII money will come into India. That is a good news for our economy, and that will also help equity markets to scale higher levels. S&P Global expects India GDP to double by 2031. That presently we are at around 3.1 trillion, which is likely to go to 6.7 trillion as per the S&P Global report. So if India becomes 6.7 trillion economy, I am very confident that the Sensex will double from here. It will go beyond 1,30,000, which is at presently at 66,000. Sensex is likely to touch or go beyond 1,30,000, and Nifty from here around 19,700 or around 20,000 levels to Nifty is likely to go to 40,000 levels. So this is a kind of opportunity that exists for the Indian investors in coming 6 to 8 years time. Bank of England has raised the interest rates by 25 basis points to 5.25. So that means still they are struggling to bring down the inflation in UK. What is the risk for the Indian economy? The rising crude price and persistent inflation, especially the food inflation, is a key risk for Indian markets. We need to keep a watch on these factors, and also the corporate earnings. The first quarter result season, especially for large companies, is almost over, and most of the companies have seen some kind of pressure in the earnings growth. There are more downgrades than the upgrades. So this is due to the high input costs and high commodity prices in the previous quarters. So unless we see the inflation coming down, the corporate earnings also will be affected by the inflation and input costs. That is why the high crude price and the persistent inflation is definitely a red flag for Indian markets. So investors should keep a long-term view and should not get worried about short-term volatility like the correction we have seen in this year. Our macroeconomic fundamentals and the economy growth in India is quite stable and it is likely to improve in coming years. So there is a very good opportunity. The investors have to learn to live with volatility. They should not get worried about short-term volatility. We remain invested with a long-term view, and they will get very good returns in coming years. If you like my video, please subscribe to my channel. You can share with your friends, like my video, and you can give your comments. So we will meet next week again. Thank you.